morning, everybody. It's Friday, May 31st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had July corn up 4.5 at 453 1/4. July soybeans were up 12.5 at 1222 1/4, and July Chicago wheat was up 6 3/4 at 687 3/4. This morning's export sales report was another solid week for corn, 810,100 metric tons for 23, 187,000 for 24. Estimates were somewhere between 600 and a million. Soybeans, just I'd say average, 329,400 for 23, 6,900 for 24. Wheat sales, the net cancellations of 60,900 for 23, 381,700 for 24. Meal sales were in the upper end of the estimates, 265,500 for 23 and about 20,000 for 24. Good morning, guys. Just a few thoughts to kick it off this morning. I know we were talking before the show. We got some pretty solid ethanol data there out yesterday. Open interest continues to rise in corn. So, Justin, maybe a few thoughts to kick us off this morning. Throw it around the room and put a bow on this week for everybody.
Yeah, thanks, Dan. Obviously, we've had a massive break this week. Broke roughly 33 cents from the high D's corn from where we opened Sunday night. Trade up to that 493, kind of tested that 200-day moving average that we've been talking about, and we ever since we saw aggressive selling all the way down to kind of the recent trend line of that 370, 371 that we saw yesterday. So massive liquidation, or I should just say selling. I'm not sure it was liquidation. Open interest has been going up. Feels like a lot of farmers selling, a lot of phone calls, a lot of worried producers. And I think even small to professional, small traders, professional traders to managed money traders, are all kind of piling in the short side, as the 200-day failed and we got the crop planted. It's kind of the attitude that you hear. So I feel like we're in a kind of a short-term, the crop's made, type attitude. I know that's not necessarily, what people are trading, but crops planted, we're going into June, seasonally atop, all those kinds of reasons. You're seeing just a lot of hedge pressure and selling pressure. On the downside, we talked about this, that on these breaks, we keep seeing corn demand. And I think that's prevalent here. We're seeing ethanol margins are, hitting new highs for the move. They've been steadily going up since December, so those keep going higher. We had a record monthly export for ethanol in the month of May, and we continue to do export business. So, I think all those things are supportive on these breaks. So I think we're going to be underpinned by demand on breaks and on rallies. We're still running into, good hedge pressure, good spec selling, until we can turn the technicals up to where they feel like they have to cover. It feels like they're comfortable fading these rallies from what it seems to appear like here. Soybeans, as we've talked a lot, hanging in there better than I would expect, given the relative fundamentals. Obviously have a huge crop acreage number at the end of the month, which will be kind of telling on what that acreage mix is. I think there will be a change. It just seems like we're set up for that with such a large total loss in corn and bean acres combined, and kind of we threw everybody off guard by the mix. So I think there will be a change. It'll be interesting. We're obviously in the camp of, we think it'll could even be more bean acres and less corn or steady corn. And there's others in the industry that are the complete opposite. So probably why you see that corn bean ratio, or one of the reasons why you see it so volatile and unwilling to really budge too far from that 2.5 to 1 right now. I think I read somewhere it's been the tightest range for this 90-day period in 10 or 15 years. So obviously some torn opinions on that, but beans, you get these short-term stories where, nearby Brazil basis pops or things like that. It hasn't really turned into U.S. demand. So the board rallies, because I think there's not really a good South American bean contract. So all those hedges are on the, on the CME. Chicago contract, right? So when they have to cover, when South American crushers have to cover, exporters have to cover some needs in futures, it tends to come in our July contract, for example. So I think you get some of those kind of things that cause these rallies, but overall, I think new crop beans at $12 is going to be a pretty good sale. I guess I look at it as if you're bearish 470 D's corn, you should probably be pretty bearish $12 beans.
Yeah, and I'll add to that too, because I think there's been a pretty big mentality shift on just what's a fair price for grains. And, when you go to the turn of the calendar year, we had that unique situation where we had really good cash flow for growers in the 23 season. And so a lot of bushels we believe were carried into 24. So I think most people have an agreement on. And then a massive sell-off into that, March first notice day window, like that week of the March 1st notice day, we hit the low so far, at least for the year. But you take an average price in the lower fours, somewhere like 430, that a lot of that grain was moved. And then now all of a sudden you're looking at D's corn in recent days trading in the 480s and 490s. I think the idea is, hey, that's not a bad price. If I was willing to accept 430 corn for my old crop, why would I want to get in that same position again when I can sell new crop at 490? And especially if I can start adding some premium onto it and do an accumulator or something like that, all of a sudden people get, very willing to forward sell new crop corn at these prices, which they would not have probably done in the previous couple of years. We've been in a much higher price zone in the 6s and 7s for a lot of the recent time frame. So that's driven up costs, and our average cost production is still well above 5 on the university data. But if there is, now I'm saying it's not going to happen.
And just to add to that, anecdotal data, I mean, just clients. I mean, we talked to a lot of clients in a lot of different areas. So it's not just university data, it's actual data too.
Yeah.
So we've seen it from multiple, ways.
We back that up for sure from what we're seeing, especially people that will track it, with financial services. So let's just say we start going above that 200-day moving average, and maybe the funds are starting to pull back again on the shorts. And if you add in just a little bit of weather pre-pollination window into the forecast, and you start getting up to a $5 price again, and how much of this has been forward marketed? How much of it has been forward marketed with double ups to try to get the premium? It does have a lot of that same feel that 2020 had to us. So all of a sudden, what had been a tailwind, all these things we're talking about, all these bushels that need to be sold, that's kind of preventing the move, the huge headwind all of a sudden turns into a tailwind, right? Because all those bushels can't be resold, and I think we've seen this in years past. If there's a reason for it to start going, it's kind of an explosive situation in our opinion, because that's where you start getting calls saying, oh, I might be oversold with accumulators, or I feel like I've done too much, I've got to buy it back with calls. And not only are they not selling, they're actually promoting the rally in that move. So again, I'm not predicting that to happen, but I do think if we start to see moves above $5 and you're getting funds to bail out, I think there's going to be a lot of tailwind behind that move.
Yeah, Dustin, to that point, it's funny, you look over these years and you pull up all these different tools and you can almost predict. It's just history repeats itself, and we have a short-term memory. But the last time this happened was 2020. And it happens after a complete bludgeoning where you get the farmer way too long and they just get annihilated, unsold. And the second we turn, it's right, because you're licking your wounds. So it's any way to get that money back. We saw massive accumulators getting pitched by brokers and commercials. And I mean, it was the most popular trade in 2020, right? It was selling 2021 accumulators, 2020 accumulators. Then something happened, right? And then everyone knows what happened after that. But history repeats itself, right? It's very similar. It's not the same. We're at higher prices, for sure. But it's a similar attitude, and a lot of people are just throwing up a chart like, look, in 2014, we went from $5 to $3. Now we're in 2024. So it's kind of the same thing, and they just show a chart of where we're at, and not that it can certainly happen. But, I remember 2014 very well, and nobody was sold. It's completely different. We broke the entire way down. We talked about it being too cool, a little too wet. It was perfect weather, and we just broke all the way down. This is pretty aggressive selling from being, very undersold to probably a little above average, or even great, more than average. And I would say, we talked about this yesterday, but there's a lot of farmers out there, and this is not everybody's by any means, and everyone's a lot, really different on their marketing and aggressiveness. But a lot of growers seem to double down one way or the other. They're either bearish or bullish. And if they're, to your point, if they're gonna flip and sell old crop, you might as well sell new crop too. It's very two-dimensional. It's either going up or down, right? And there's a lot of people that a little more sophisticated and do different tools and think about it different ways. But that is, a large part of the industry does kind of think that way. So if you're going to sell 420, to your point, why not sell 490 for next year? And I think a lot of people are not looking at break evens or anything. It's more of, well, if corn's going to go from $4.90 to $3, I better be sold. It's not really what happens if my yield's a little lower and we're at 550 and now I'm in a negative margin environment. What do I do? That's usually after the fact. So to your point, I think it's just important to keep in mind of what that would mean to you. If all these accumulators, I know we had commercials pumping them hard yesterday, the 490 level. We've been seeing 490 to 520 accumulators for months and months and months. What does that mean to you if you're in an area that, you start getting clipped and you're in, mid-July and you haven't rained, or you've rained too much, or all of a sudden your market yields down 30% on your personal stuff, and you don't know if you're twice as much sold in an accumulator, so you kind of get frozen. That's the risk of those things. They're great in small doses and in the right environment, but usually in desperation, people overdo those kind of strategies, which can be dangerous and cause that explosion like you talked about.
Yeah, for sure. And I know we're sounding quite bullish today. I don't want to give the impression that the market's just going to go up here. I want to keep an open mind. We still are wanting to hedge and reduce risk. And, like for all we know, it can go to $4 and below this year. And it would have been good just to sell everything today. It's just that we have to have a balanced approach. Are we going to be okay if it's high yield and low price, and also okay in a high price, low yield situation, right? You don't have to be so black and white of being, like you said earlier, all the way sold because it's going to 3, or all the way unsold because it's going to 6. We don't know what's going to happen in the summer. And that's critical to the approach. But there are a lot of nuances of trying to get that, and be strategic about that.
100%.
That's really good stuff, guys. Ben, couple of thoughts here as we wrap the week.
Yeah, I was thinking about what Justin said about the ratio and that 2.51, and I kind of think that there's still a perception of tight bean market on old crop and really plentiful corn, which that's up to the market to figure. But I do think that it's an interesting point in the calendar when you get to the end of the month, especially with some delayed planning. You've got options go off the 21st or 22nd of June. You got a week later, you've got that big report. And I think then we will, we'll have a much better idea where we're at. And I kind of think we're in a sideways, choppy, range bound trade until we get through that July expiration.
Yeah, we've really found, to that point, Ben, it seems like we've found where we find demand on breaks and find selling on rallies so far, to your point.
I don't know why, if you step back and look at it, why anyone would want to pile drive corn at this point of the year. I know the seasonals are there, but that big report at the end of the month, certainly I think it's the problems in Russia, Ukraine are real. So I think that the managed money could be getting out in front of themselves just a little bit, almost like it's a risk-free trade. And what Dustin said, they could be right. And we could continue just to slog and decline lower. But I think that it's a different set of parameters this year than what we had last year where it worked. And if anything, anyone who's been around trading for a long time is you go with what works until it doesn't work. And I think that that's where the mode of managed money is at right now is they think that they've got a free 50, 60, 70, 80 cents. And when you approach markets with with a lack of humility is sometimes when you get your hardest lessons.
Well, very good. Ron, just a couple of quick thoughts to wrap the week on cattle for us.
Yeah, you've thrown a lot of kind of negative sentiment at the market over the past couple days, just with, the China delisting the Greeley plant, and also you had a third human test positive for bird flu in Michigan. Slightly different system, some respiratory, and it just kind of feels like, even though there's barely a change in open interest, you've thrown a lot at it. You got the discount on the board, and you got cash prices that so far have been kind of a little bit on the weaker side, but I think everybody's kind of looking at it like there's not going to be a huge change here in cash this week. So looking for some stability. It feels like you're throwing some really negative news and negative sentiment to kind of breed some fear in the cattle market towards the end of this week, even as beef starts to firm up here. So we've seen some cash at 186 in the south, 298 to 304 in the north. So it seems like we're not going to see a big change on the cash side of the market right now. Just feels like, we're just throwing some bad headlines at it, and all in all, it doesn't really amount to much. We're still going to trade the day to day. So hopefully we can kind of finish on more of a positive note, but the tone has definitely been negative. August feed is trading right down to the 20-day and holding support. So it feels like we're trying to hold that together. And we'll hope to see more of that towards the end of this week.
Well, very good. Appreciate that wrap. And it's Friday, so it's big reason why everybody tunes in on Fridays for Brian's Fun Fact Friday. So what do you got for us, Brian?
Appreciate it, Dan. Happy Friday, everybody. Some are experiencing a pretty wet spring here, as we know. So I started looking at the Mississippi River levels, and they are a little bit on the rise. No pun intended here. I went into a little deep dive on the Mississippi River itself. It is the third largest watershed in the world at 2,340 miles long, from the headwaters of Lake Itasca in Minnesota all the way down to the Gulf of Mexico. And here's the fun fact. That might blow your mind, but single drop of water will take 90 days to travel the length of the Mississippi.
Wow.
Boom.
Somebody's tracked that.
Yeah. I'm not sure who did that information and where they got it from, but there we go.
You got to meet that guy.
Yeah, right? Yeah. So happy Friday, everybody. Yeah.
There you go.
There you go. I mean, if you got to drop that on somebody, that's good
No
stuff.
pun intended.
No pun intended, right?
You're right.
All right. So opening markets here. July corn's up 3.5 right now, 452.5. July soybeans are up 9.5, 12.19 1/4, and July Chicago wheat's up 6 3/4 at 687 1/4. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a great weekend. Appreciate all the thoughts and comments here this morning, guys. It was a good conversation. Have a great weekend, and we'll see you again on Monday.
Thanks, Dan.